Good morning. Welcome to Stock Market Today for Wednesday, September 30th, 2020. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get the content for this show. Also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. Just a quick programming note. I will be off for the next 2 days, Thursday and Friday, taking some time away as today is my birthday and I'm going away for the weekend. So there will not be a show from me on Thursday or Friday of this week. I will be back with you on Monday. Let's dive right into it because U.S. equities were under pressure yesterday. And an interesting dynamic kind of playing out in that they are stalling at the 50-day moving average or the SPY. We'll take a look at that a little bit later on in this show. They did rebound from the worst levels of the day. Value lagged again. Energy and financials to just utter dumpster fires, underperformed, while comm services were the only sector that gained on the day. Utilities, healthcare, and tech also outperformed. Treasuries were bid. The dollar was stronger against the yen, but lagged on euro and sterling. Gold finished up 1.1%, closing back above $1,900 an ounce. WTI crude down 3% off the worst levels, but back below $40 a barrel. As we get to the desk this morning, futures are down 1% on the S&Ps, rebounding a little bit after finishing mostly lower on Tuesday. Asian markets were mixed overnight. Australia and Japan, the notable decliners, while Hong Kong outperformed. European markets are weaker. Treasuries are unchanged to slightly weaker. The dollar is seeing solid gains against the euro and sterling, also a bit better versus the yen. Gold is down 90 basis points with that dollar strength. WTI crude is off by 1% to kick us off on a Wednesday morning. Where we're going to take a little bit of a different look. We know the levels, right? By now, we know the key levels of near-term support. 325 for the SPY, 270 for the Qs, 150 for IWM. We've been talking about them. We know. Right now, let's look at how things are playing out relative to the intermediate trend, which is the 50-day moving average as far as I'm concerned. 50-day moving average for SPY is being battled, and we faded from there twice over the past 2 days. So after rallying from our support level and heading higher, we've now met the 50-day moving average, which is beginning to stall a little bit, if you will, here. Kind of the slope of the 50-day no longer as positive as it had been. So it's just something to keep in mind here. Qs barely above. QQQ is barely above a flat measure of this trend. Take a look at the 50-day for the Qs. It's gone sideways. We're barely above it. So that's kind of interesting. And IWM is below the 50-day. What does this tell me? This tells me that traders are likely to get chopped up, right? You chase strength one day only to see it fade the next, right? We're in a choppy environment at the index level. There's no two ways about it. Whether you're looking at SPY, Qs, IWM, big picture ETFs are choppy sideways. Your stock selection is going to be important. Pay attention to the messages of the market. Are breakouts holding? Not really. Are support levels holding? Yes. So I think traders, it's easy to get chopped up. I think investors, people who are, taking a longer term or an intermediate term view, people who are doing more than seeing these things as just ticker symbols that flash by, they're doing the work. I think you should be looking for quality ideas. And as long as markets are holding above key support levels, you can start to redeploy the capital with a longer term view into quality ideas. I think we're at the stage where quality is going to matter. I think quality growth in particular is where you're going to want to be focused, right? I think these sideways, choppy type markets are a great environment to almost turn the screen off and go read about a business and then identify where you have conviction. I think that's a great exercise. It's actually something I've been spending a ton of time doing over the past couple of weeks. Let's hit our market in a minute now. What are we writing about today? Well, the equity rally stalls. SPY can't break the 21-day moving average. So interestingly, the 21 and the 50 are in play for SPY here. So that's kind of an interesting dynamic. Sentiment is much less greedy. Some metrics actually pointing towards fear. Take a look at the CNN Fear Greed Index in a fear zone. S&P 500 spec positioning is no longer a tailwind. We're actually small net longs on the specs. South Korea shows that September Tech Swoon was not global. And that's kind of interesting to me. We'll talk about what that means a little bit later on in the show. Futures, as I said, point to a lower open today. Let's look at the power bars now. Still a mixed bag out there. Dow down 53 basis points, S&P down a like amount, 4 to 7 bulls to bears on the Dow, 118 to 102 bulls to bears on the S&P. Nasdaq down 45 bips, 28 to 11 bulls to bears there. Small caps down a like amount, 533, 326. Bonds uptick in a flight to safety, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. So our stock of the day now. Now, what jumped out at me yesterday was the fact that semis actually outperformed again, right? Big driver of our view that we think it makes sense to redeploy capital. One of the proprietary metrics that I look at pointing to a shift in the momentum of relative strength of semis. We talked about it last week. Not so much the momentum is what I'm interested in most. So we've seen it play out. It's why I think the tech swoon is not global. We'll talk about other reasons. And it's why I want to be looking at names like Taiwan Semiconductor, TSM, with a bullish rating, strong trend, strong industry group. Outperforming, oversold based on our indicator with bullish money flow, trip not one but two buy signals today, a money flow buy signal and a relative strength buy signal. So I think it makes a ton of sense if you're looking for quality growth ideas, I think it makes sense to have a solid understanding of what Taiwan Semiconductor does. TSM, take a look at that name as a potentially bullish idea today. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Utes at the top of the list. That screams safety. Followed by tech. That screams quality growth. Followed by discretionary, another one of the groups that we like. Healthcare, interesting, because that's been a fade of late on a relative basis. Middle of the road, industrials, REITs, comms. Staples towards the bottom of the list is encouraging for equity bulls. It really is a mixed bag out there. You've defensive Utes at the top of the list, but defensive staples towards the bottom. Financials, materials, and energy. Well, energy, I don't know a nicer way to say it. Dumpster fire. Financials, I don't know a nicer way to say it. Dumpster fire. Materials are the ones that bother me because we've been bullish there. And so after being very right, for the June, July, August timeframe, we've now run into a little bit of a ebbing and flowing in the materials relative strength in the late September timeframe. We'll see how that plays out. Largely a function of commodities, which are largely a function of the dollar. So we see dollar going higher, weighing on the inflation trade a bit. We'll see if that continues to play out. But we've talked about it. You had your shot. In my market survival guide note that goes to clients on Tuesdays, last week we actually started to cool to the gold trade. So take a look at what's playing out there. Our industry in focus, biotech services over the past 6 months, been an outperformer by about 14.5%. Power bar ratio here is weak, but that tends to happen with biotech where there are a lot of smaller stocks that don't have any earnings. Some don't even have revenue, right? Preclinical or clinical stage companies, right? So hard to put a fundamental rating on those. I personally tend to look at biotech as a group, their individual names. I'm not smart enough to understand the individual names. I rely on other people. If I do want to look at individual names in biotech, I reach out to people who I know who are dedicated biotech analysts because it's not my skill set. The science part of it's not my skill set. There are other people who do it. And some of them are MDs or PhDs or even PharmDs who analyze these stocks. For me, I can analyze trends, but remember on the individual names, a lot of these tend to be binary events. So I tend to look at biotech as a group. And XBI is a bullish group from a trend perspective here. On the ETF, strong trend above the trend line. I see a consolidation here, right? So breakout consolidation, inline performer at best right now. So not a lot of love either way here. I don't have a strong view. I mean, if you kind of held me to it, I'd say I'd lean bullish because we have the money flow lining up. We have the rating. It just looks like a consolidation within an uptrend, but not the most exciting group right now. Individual names, completely different story. I should probably spend some time with it, but that's kind of how I'm seeing it right now. Let's look at what's trending. Yesterday's movers and shakers, our gainers and losers. PAYC, no news, up 4.5%. Hasbro caught an upgrade at Stiefel to send that stock higher by nearly 4%. DXC didn't see any news there. 3.5% to the good. AMD semis had a good day yesterday. No two ways about it. AMD up 2.9%. ANET bought a small company, stock higher by 2.6% on the day. Loser side of the board, nothing company specific to drive trading here. APA, NOV, and HAL all levered to energy, which was a big underperformer yesterday. TPR and KSS levered to kind of the retail consumer trade. Talk, or I'm not talk. We're seeing an uptick in COVID cases again, especially in higher profile areas like New York City, which may be weighing on sentiment. Me personally, I think this is just something we're going to have to deal with. The headlines are going to point to it. People are going to get excited. Stick to the process. If it's something to get concerned about, risk management will take you out of the trade the same way it did in February. So that's kind of how I'm flaring it up. Let's look at the charts now. Sentiment, less greedy but mixed. Less greedy in that this CBOE put call ratio continues to move higher. We're still below the 0.6 mark, the 13-day moving average. 0.6 tends to coincide with excess greed in the market. We're still there, right? We're still working off that August phenomena where everybody was chasing call options in tech. Found out that a lot of it was SoftBank, but it was more than just SoftBank. All right, let's kind of be clear there. But it's also a reason that I think the tech swoon in September was purely a U.S. phenomena. And I spent some time writing about this in my note today. I spent some time talking about it here on the next slide, but we're going to get to it. I think what's interesting is the VIX is still elevated, right? So still, I think that there's a lot of ways to get yourself chopped up in this market still. If you're a short-term trader, nimble risk management, right? The prospect of being chopped up is there. I'm not a short-term trader. I'm looking for good ideas with the market above 3250. So I kind of been, adding to core positions is how I've been doing it. Core names, quality growth in the tech, discretionary, comm services space. That's kind of how I've been doing it. Not deploying all my capital, certainly. But opportunistically adding to the high quality names, at least as I see them, that I own, especially the names where I have a good understanding of the story and can gain that level of conviction. So here's what I'm talking about, why the September Tech Swoon was a U.S. issue. Take a look at the main screen here. This is South Korea, EWY. You notice it's just a sideways consolidation. Not a swoon the way the NASDAQ was down, over 12%. Just kind of a sideways consolidation, that we're still in. Why do we care? South Korea is over 40% tech. How about the middle? How about Taiwan, EWT? Similar dynamic, just a sideways consolidation, and we're now working back towards the top end. Why do we care? Over 50% tech in Taiwan. Interestingly, too, a lot of these companies in Taiwan and in Korea are part of the tech supply chain. So if we thought that there was a big issue in tech, right, 12% pullback in the Qs and now choppy. If we thought that there was a big issue in tech, I would think, and I'm just kind of connecting the dots here, I would think we'd see it in the supply chain companies in parts of Asia. And we're not seeing it just yet. That's not to say it can't crop up. Maybe the US is early, but it's interesting to me that these highly tech levered markets didn't witness the same degree of selling pressure that the Qs saw here. So something to keep in mind. It's why I continue to like tech. I don't think it's a breakdown. I think it was purely an options phenomena back in August. Finally, check out high beta. I think this is a proxy for your cyclical trade. And on a relative basis at the bottom of the chart, it's beginning to roll over once again after failing to come near the June high. So that is going to wrap us up for today. As I said, I am off for the next 2 days to celebrate my birthday. I hope you all have a great weekend. Take us for a test drive. I'll be back on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.